What is going on, everybody? And in this video, we are giving you a state of the market and stock picks for March 17th, 2022. So let's get right into it. Today was a big day, the day everybody's been waiting for since the beginning of the year. Yes, we have been waiting that long. We knew this year the Fed was going to do something to combat inflation. They've been talking about it. They've been televising it on what they were planning on doing. Now, being said, it's not to say that other Fed members have been coming out and talking about some pretty dramatic rate raises. But nonetheless, Powell came on today and clarified what exactly the Fed is actually going to do. They came in at 25 basis points. And being said, that is something we were at least going to get. And I talked about this in the beginning of this week, that if we hit the 25 basis points and we hit stopping the bond buying, we would possibly go for a parabolic move to the upside. And what we got today was we got the 25-point basis, but we also got continuation of bond buying. Now, why is this important? And why is the Fed buying bonds? Now, just to give just a real quick, brief explanation of why they buy. Essentially, the bank has assets with other different bonds. And being said, if everybody tries to come and cash out, you're talking about the bank assets compared to liabilities. So if everybody tries to come and cash in and get their money, the value of their bank account, right now the bank has to turn around and lend out that money. Now, typically they have a very small fraction of that money at hand. And yes, they can start selling bonds and stuff to essentially pay out the customers. But ultimately understand, in times of desperation like we are in, if everybody came to the bank and started trying to cash out because of fear, it would essentially crumble our financial system. And so you have the Federal Reserve that backs these banks by buying bonds. And actually, another big catalyst here is, banks have to have that fraction, but essentially the Fed has waived that fraction to be held by the bank. And so essentially the Fed has taken full responsibility of supporting the financial system because they can just print money out of thin air. And so being said, it's important that they continue to buy bonds because I think we are still on a very shaky platform. Now, if a war didn't kick off in Russia and Ukraine, maybe they would stop the bond buying, but that's added more fear into the system that wasn't presently there. So being said, you're trying to combat inflation, people will start to panic. And if everybody tries to go to the bank and cash out, you're going to cripple the financial system. So to be able to prevent that, the Federal Reserve has to continue to buy bonds to where they feel that it is safe enough to let it go, and that people aren't going to have that fear to run and cash out. So being said, that's why it is important from this point, and it's essentially holding up the financial system. And so being said, this also allows all your companies to continue to progress and try to build without having that fear. And so with the Fed coming in and not actually stopping the bond buying is actually more bullish. That's putting a more bullish sentiment back into the system. You're almost flashing this back into November or last year when we had some really parabolic moves. We're going back into that bullish sentiment. Even with Russia and Ukraine, that is still an ongoing issue. You still have to be aware of that. But now the whole dynamic of the market, I came in today thinking short-term bear, long-term bull. Now I'm thinking more short-term bull, long-term bear, considering what is essentially the cans being kicked down the road, and are we going to actually be able to combat inflation if it doesn't get out of hand? So before getting into too much about all the nitty-gritty about what's going on, just kind of understand that is what's going on today, and that's why we made the parabolic move that we did. It doesn't make sense, but you have to understand the market again is not directly what's going on in the world. What is the events that are happening in the world with the war? It's not directly impacting the stock market. The stock market is completely different based off of, again, supply and demand, based off of the financial system and where it's currently sitting. And again, we'll see a lot of shockwaves from the war and lockdowns and everything else further down the road once we start getting to earnings, which again will correct at that point. Maybe not a true correction. We might get a little pullback, but understand that is also coming further down the road. But we are looking short term. Short term, things are extremely bullish until the next Fed meeting, because Powell stated that it will be determined upon every meeting if something needs to be done. So that doesn't stop us from them becoming more hawkish and starting to apply higher rate raises, because after Powell essentially spoke, end of year, we're looking at I think they said 1.5% rate raises. So it became way under what they were expecting, right? And so being said, that means that they're going to have to be hawkish at some point during the year. As long as things don't get too carried away, they're going to have to start applying more rate raises, especially if it starts running away a lot quicker than they expected. Obviously, they had to do something. They did something small, expected. It's actually way below expectations, which is a very bullish sentiment in the market. Again, any kind of rally right now, I think after what happened today, it's actually a pretty bullish sentiment that's been brought to the market. And this rally, I think, will last for a little while, at least until we come into the next Fed meeting. And then you have to start thinking, okay, well, once we start getting to the next Fed meeting, we're starting to look at earnings again. And so you have all those other things coming into play. So again, there's a lot of moving pieces here. Again, stuff with Russia and Ukraine can always change the dynamic of everything again. But right now, there's a very bullish sentiment in the market for at least the next couple of days. Kind of see how it continues to play out. But currently, with that going on, with the Fed's continuing to buy bonds, it's going to have a bullish sentiment until it is changed. Being said, that's a lot of information. I try to make it as compact and as simple as possible. There's a lot of complexity about what happens. This is a very simplified version of what's actually going on. But SPX, we did have a wedge break. Big key is if we can hold this 43.30 mark tomorrow. Again, we broke above a lot of support with that parabolic move, essentially fueling the banks, fueling tech, which are always our biggest leaders. So being said, we're going to continue to see, I think, a pull. This initial drop here was essentially everybody seeing that the end of year, what the end of year expectations were looking like. It looked extremely hawkish, and I think that's why we sold off very quickly. Then we're like, okay, wait, well, they're not stopping bond buying, and they're only coming in with a 25 basis point. We expected that, so short term, that's very good. And then we kind of get the generalized, well, we're not really sure how quick we're going to raise it. So that kind of leaves it up for, well, we can probably continue to keep rolling up for quite a bit of time, possibly even try to attempt an all-time high before any kind of massive amounts of changes occur. When are the bonds going to stop? Now they're saying maybe it's in next month meeting. If it doesn't come next month, when is it going to happen? Right. So then you're going to have this essentially this cascading effect that every meeting that we go into, okay, well, what's the expectation? What are they doing now? What are they doing now? And we're not going to know because they're gauging off what's going on in the world and any kind of events. And it's not even including any kind of random events that might occur along the way. So there's a lot going on there. So again, SPX is pretty crazy at this point. But we're looking at, I think we're looking possibly at that 4,400 mark. We may hit that overnight and then sell off and then continue to start ripping up. This is why I said the last couple weeks, again, unforeseen that they would continue to buy bonds. That was very unforeseen. But again, we did break the wedge, and that's what matters. And so we could look for a retest again around that 4,300 mark, possibly for an entry, one last dip before we start pushing up. Again, I don't think any push up is going to be smooth. I think we might get some big candles like this, and then we're going to get chop, push, and then we're going to get some bad news and sell off again, just like we've been doing these choppy weeks, and then these massive rips, choppy weeks, push. This is kind of what I'm foreseeing for the next for the future until we get through all whatever rate raises there needs to be, until the whole clarification of what's going on with Russia and Ukraine. Again, there's just a lot of moving pieces right now. So again, very bullish right now for the next coming days. Again, the sentiment can change. If we get a ceasefire on top of everything, I think we're going to attempt to run for an all-time high very quickly if that does happen. That's just something more to fuel the fire. Again, if that ceasefire doesn't come sooner than later, and again, we've been getting a lot of mixed messages saying that the talks are doing well, and then 2 hours later it says they're not, and so we start selling. But right now, I'm very biased to the upside until I see different. Again, any news that's not new news or something you haven't heard of yet is not going to sink us, I think, at this point. So it has to be something dramatic, like China is going to enter the war, or China continues to lock down supply chain. The supply chain stuff is going to happen during earnings, so that's something we need to look at later on down the road. But if China decides to invade Taiwan, right, or if whatever other scenario might play out, so that's left field that we don't see coming, that will continue to make us sell. Aside from that, I feel very bullish now, considering what is going on with the bonds. Now, Bitcoin. I think Bitcoin, we're just adding more fuel to this fire, in my opinion, especially with bond buying and the inflation. Powell is still saying that by next year, inflation should get back to some kind of normalcy, even with him not being extremely hawkish at the moment. So we have to see if that's true or not. But again, I think you're just making a very strong case for Bitcoin and crypto moving forward, especially for this year. I think crypto could have a huge year considering what's going on. But we have to see. I mean, it still has a lot of levels to break here, especially it needs to get back up to this 43K mark and break over that. But ultimately, the big key again is that 46K mark. If we can break that, so you got a couple levels here we do need a break, but again, it hasn't sold and been actually holding this 38K mark very well. So again, I think very bullish on crypto this year. Again, I think it's a breeding ground for crypto this year. So I think this will be the year of crypto. And again, something else to be mindful of is Saudi is might be accepting the yen as payment for oil. And if that's the case, you're going to bypass the dollar. The dollar could lose weakness. There's a lot of different plays that are very much what-if scenarios that will add more fuel to this fire. And so you need to be mindful of that. Now, going into tomorrow, I'm going to talk about all the stocks I normally talk about. Looks like Tesla's starting to come down, but this pump might be short-lived, to be honest. This is why I talk about how you should let things play out and digest overnight, because even though there's a bullish sentiment to it that's, hey, you know what? We could continue to push up because of the bond buying, right? Because of the Federal Reserve support, right? This would help us continue this massive parabolic move since March of 2 years now. It can help that, but ultimately understand that we'll still pull back, right? Sticker shock is gone. Now we start pulling back. But how far do we pull back? If we pull back and we hold, kind of looking at that, the 800 right now, I think would be a good point. I don't know if Tesla's going to go any much lower than that, especially with the current situation. Tesla might do very well. I'm looking for a retest around that, possibly 820. 800. Then you have the 970 mark, and then we just popped out of the 760 mark. So maybe we come back to that 800, retest it, and then start making higher highs at that point. Again, pretty soon you're going to start having earnings coming around. About a month or so away, you're going to have earnings again for big tech. Again, that's going to be insightful, especially going on with what's going on in Russia and the world today. So Tesla's one I want to watch for the pullback. Google's another big one. Again, I've talked about Google a lot. I've talked about Tesla a lot. Again, they're all starting to pull back. Sticker shock is wearing off. I think if we go really watch that 2600 mark would be great. Else not. You're looking at that again, that 25 K mark. Make sure we hold that. Again, I don't see us breaking this. We need a big catalyst to even break this. Even with all the junk that's going on in the world, I think you're going to need a massive catalyst to break this down. Yes, the world is shitty. Yes, there's a lot of things going on. But the market may revisit this until we get clarification on Russia and Ukraine and then start going parabolic. But again, there's a breeding ground for tech and banks to keep running at this point. So just be mindful of that. So overnight session is going to be really important. The digestion will be really important tonight. UPST is another huge one I want to watch tomorrow. If I can get an entry at the 100 mark. I missed this one with this wick today because I was definitely watching that 100 mark and I missed it. But we'll see what happens with UPST is another big one. Another big one you want to watch is the chips, how well the chips are doing. And the chips themselves on the daily, they have to break this wedge. It looks like we're attempting to break it. A lot of these look the same. Even if we go back, I just showed you the SPX. We did have a break there. Tesla, but all the rest of these big techs and chips and everything are the same thing, right? Like, sorry, TOS is always lovely sometimes. But Tesla, the same thing. We got a break, but can we hold a break? Are we going to actually come back and retest that 820? If we do and hold, that can be massive, and we can get a nice rip out of this. We'll start revisiting possibly at 1K. I can see that. I can see a nice massive rally until we get clarification on what's going on with Russia and Ukraine. If that comes sooner than later, ceasefire comes, again, that will more likely come out of the blue. And then when that happens, it's going to be a massive parabolic move. And I think it possibly, again, depending on the time frame, I think you got like 2 or 3 weeks where we've got a breeding ground for more strength to the upside. And if it falls in between there, I think we can have a massive parabolic move to the upside, possibly even try to attempt to go for all-time highs. But those things have to align. We got one side of it being the Fed. We just need the other side as that ceasefire. And then if that does happen, I think we can really start ripping from there. So again, watching chips, LRCX, same thing. All of these got the same wedge breaks. We want to see if this wedge break on the daily is actually going to play out tomorrow. They're just barely breaking over. Are we not going to and actually come back down? That's the ultimate question. So tomorrow will be big. Digestion of what just happened will be big. Again, just because tech is going down, your banks are more likely going to run heavy. Your value, right? If tech starts selling off, your value in your banks more likely are going to start picking up the pace and start running. So watch them. But I do, for a big turnaround, you definitely want to be watching chips and see where they're at tomorrow. LRCX, AMD is another big one. I really like this one tomorrow. If we can get a break and a hold above that 115 mark, I really like AMD tomorrow. NVIDIA, I see, as you can see, all these patterns are the same. To break and retest. So you're kind of looking at a possibly 238 entry on this. If you can get 238 entry on the NVIDIA, that would be fantastic. ASML, I really like ASML. Same thing. These things are barely, this one actually broke pretty clean. If we can get a pullback to that 128-ish mark, I think could actually get a really good entry on ASML. And after these wedge breaks, normally you can go about 50% of what this wedge was. Typically, now these aren't always been playing out just because of the circumstances, but typically you at least can get about 50%. So you're looking possibly about a revisit back to that 700, 730 mark on ASML. MU is also actually had a huge gap up today. Another big one to watch. If we do decide to sell, if we're going to actually come back down and retest these levels, is the question. ultimately for tomorrow. I really like Roblox too. Roblox might actually have a break here. As long as it doesn't break below the 38 mark, I think Roblox can really start making up some ground. They just had numbers that come out, some absolutely ridiculous numbers. So I think Roblox is another big one to be watching tomorrow. Typically, if the market is selling off, this was a safe haven for a while, especially when it had this parabolic move. Anytime the market would sell, people would shift their money into Roblox and we'd have these nice pumps. But now ever since what's been going on in the market, there's been a lot of news with China banning games and stuff. And so it kind of fell into this tumble and now it looks like it's starting to break out. So I definitely want to keep Roblox on watch. Coin, it has this massive wedge. I'm watching this for a break, especially if we can get above that 178 mark. I think would be a clean break on this. But you really want to keep an eye on this. It needs to actually break this. You want the daily candle to actually open up above this wedge break. Once it does, I really feel like coin can really, like I've been talking about Bitcoin runs a coin base, almost runs in parallel with Bitcoin. Even when the market's selling, if Bitcoin is running, coin runs with it. Right now, just the whole market sentiment's just been really bad, so everything sells. It doesn't matter what has strength in the given market. Everything right now is just currently selling. Airbnb is another big one I like. Same thing, got another wedge break. So everything's breaking wedges all at one time. So it's hard. If you haven't been accumulating at all, investing in some of these, possibly look for some investments, pickups on these wedge breaks, and then kind of hold. Again, go with your high conviction stocks. I wouldn't spread out too much. Again, not financial advice, but I definitely focus on those ones and dollar cost averaging in. Your wheat is coming down. Your petroleum looks like it's getting ready to start selling. These things will still be hot and they'll still hold higher levels just because of the war. But eventually these things will start trickling down. So if you're getting FOMO on these things, I definitely chill out on FOMO because I think we're getting to the points where commodities and everything's going to rotate back into that big tech pushing and some value pushing. I think we're going to rotate back into that what the market looked like a couple months ago before we got into this whole rate raise conversation. We're starting to kind of reset and go back to that mindset is what it's looking like. Again, that's not saying we're not going to open up down tomorrow. I think that's a strong possibility after the digestion. We had a massive run this morning on news that Russia and Ukraine were coming to a ceasefire, and so only to later find out that that was not true. But nonetheless, there's still a lot going on in the market. But so those are some of the big ones I'm watching tomorrow. Again, if you don't follow me at Hemi137, that is my Twitter account. In there, I give morning talks, and if there's like important information, like today, I give 2 other talks on rate raises. I give you some snippets on kind of what I'm looking at during the day, kind of the market state, given the day, to kind of help you out. So again, if that sounds like something you're interested in, consider subscribing and hit a like. And until next time, I'll see you guys later.